Good morning everyone and welcome back to Morning Markets here at True Potential. I'm Kevin Kidney and today we're going to cover two issues. We're going to follow up on the UK inflation print from yesterday that was discussed by Chris Leyland, and we're also going to give you some insight and our views on the latest read of US GDP growth. So as Chris Leyland outlined yesterday, we had another high inflation print within the UK, but it was in line with expectations. However, there are challenges for the UK economy within that number. The first is that this measure is in no way compatible with UK inflation being near 2%. And so any sign of rate cuts are well away. And in fact, it's likely the Bank of England will remain under pressure to raise base rate even further. And that's exactly what market participants are trying to tell the Bank of England right now. As you'll see on screen, bond yields in the UK rose yesterday. That is, prices fell as further interest rate increases were priced in. So it's likely the Bank of England face a communication challenge at the next meeting in September because we're seeing clear trend of weak underlying economic growth, and we're also seeing weakness in the employment market. Recall earlier in the week, despite an unusual rise in wage inflation again, we're actually seeing weakness in the number of people employed. And in fact, the number of people in full-time employment in the UK is lower than just before the COVID pandemic broke out in early 2020. So it's likely the Bank of England are going to have to raise rates again into an ever weaker economy, and that's a communication challenge for them. The second issue we'd like to point out, and it's the complete opposite of the UK, is the remarkable strength we're seeing in US economic growth. The latest forecast we've had for Q3 GDP, so that is the quarter we're currently in, and stress it's only a forecast, is that US growth has accelerated to the extent it may be close to 5% for this quarter. For context, UK economic growth is around about zero. What's driving this? Well, there appears to be considerable boost to consumption expenditure from consumers, but also business investment as a result of Bidenomics. Things like the CHIPS and the IRA Act are encouraging private investment in infrastructure, particularly in the manufacturing industry. And this is great for growth. But this again is another challenge for policymakers in the US. This growth is way above potential and could lead to further inflation consequences next year. So whilst there's broad disinflation in the US, unlike the UK, we're seeing headline consumer price inflation fall. Core inflation is falling as well, and the breadth of that decline in price pressures is expanding. Policymakers will be worried about inflation bottoming and then rising back considerably above target next year. So that's going to be the focus, and that's what's driving markets right now. A worry about too much inflation in places like the UK and too much growth, economies too hot in places like the US. That's all for today, but please join us tomorrow for our last morning markets of the week. Thank you.